Welcome, everybody. Good afternoon to colleagues in the region. I'm Alfred SCHIPKE, the director of the East Asian Institute, and I would like to welcome you to our seminar today on RMB internationalization. As I see, we have a full house, or so to speak, a full virtual house, and you might ask yourself, why is that the case? Why is there so much interest in RMB internationalization? And I think throughout the discussion, we'll go more into detail. But I can think of maybe three reasons. One is, of course, the geopolitical tensions and broader global factors. And so this thinking of maybe we need to diversify, reducing risks. Of course, we have the implications of Russia's invasion of Ukraine. And some that have talked about potentially using the financial system to weaponize. And of course, these things are ultimately a concern to everybody. But then there are also some very unique factors that come out of the United States, where investors are somewhat concerned about the role of the dollar. So by definition, people are looking for alternatives. That relates, for example, to the future independence of the Federal Reserve, or the potentially rising fiscal deficits, and ultimately questions about the US debt situation. But then there are also uniquely China-specific factors, and I think we'll spend quite a bit on this. And that is, China itself has been pushing for RMB internationalization through many instruments, including swap lines. More recently, it has articulated even more efforts as it relates to the plumbing, whether it is the payment connect between Hong Kong and the mainland. There are discussions maybe of rolling out mBridge, a pilot that had been developed at the BIS, and others. So there are a lot of factors, and I think that's the reason why we have so many people joining us today. But who better than my predecessor, Bert Hofman, here at EAI. He was the director and is professor here at the Institute. He's also affiliated with MERICS, the Asia Society Policy Institute, and is a fellow of the World Association for China Studies at the China Academy of Social Sciences. Before, and that's how we have known each other for, I don't want to say a long time, but we have known each other. He and I were both colleagues in Beijing. Even though I was there for a long time, he was there a lot longer, working as the head of the World Bank office, and I was the head of the IMF office, and that's how we got to know each other and collaborate. So having said that, very delighted, Bert, for you. I think you are going to give us a little bit of an overview of where things are and how we got here, of about 40 minutes. And then I think we'll have a very lively discussion, and we'll come to the rules later on. But with that, Bert, floor is yours.
Thanks, Alfred. It's a great pleasure to give this presentation, and it's based on the work that I've done together with Johannes Petry from Goethe University in Germany. But it was really an assignment of the China Knowledge Network, which is a very unique cooperation in the Netherlands among ministries to figure out what's happening in China. One of the questions was, so what is this RMB internationalization, and will it affect us? Will it affect the euro? Will it affect the Netherlands? Will it affect the world system? And that's why we wrote this report. Let me start sharing slides if everything goes all right. Yeah, I think so. Let me start at the beginning and put it on presentation. All right, so In the meantime, I've added some views that touch upon this issue of more the currency competition, which has really come up even in the past couple of months, as you say, Alfred, with the more, let's say, creative policy initiatives from the US, where even some starting to doubt the central role of the dollar in the international monetary system. So one of the big questions coming up is the RMB potentially a substitute or a complement or a startup initiative that might become big over time? I think I'm still tending towards the third, the startup initiative. But if you're going to read the report, it starts with paraphrasing a quote of a book of Ernest Hemingway, "In the Sun Also Rises." And so I paraphrase by saying, well, how did you internationalize the renminbi? And the answer was, well, two ways. First, gradually, and then suddenly. And I think that's where we are, that at this point, things might move very quickly, or things might have to move very quickly, depending on the external circumstances. That's not where I start. I want to make some introductory remark. Half of them is done, and then I talk some facts about the international use of the renminbi, the plumbing, as you said, Alfred, and the domestic policy debate, and then look a little bit at scenarios for the future. And then the difficult questions, I'm sure I'm going to get in the during the discussion. I take the easy bit first. So the easy bit, I actually found this myself in the National University of Indonesia in Jakarta, where I now live. And this is a string of Ming Dynasty coins, which was in use as a currency among Indonesians and between Indonesians and foreigners. This was dug up in the last century, sorry, in the 19th century. But it really shows that the Chinese currency, it was not yet the renminbi or the yuan, but the Chinese currency was used much earlier internationally. As a matter of fact, the Chinese, they were very innovative with their currencies and their means of exchange. And they're among the first to make coins as a currency. They were the first to make paper currency under the Tang Dynasty. And the coins that you see, they were so popular that under the Song Dynasty, a decree came out that forbade the export of domestic coins to other places, because places like Japan and the Philippines and others where the Chinese traders were trading with, they loved to hoard those coins because they were more reliable than their own means of exchange. So a long history, the Yuan dynasty introduces really fiat money to the world. It doesn't go well, but it was a first. Then in part because of the withdrawal of China under the Ming dynasty, but also because of the ascent of others, the Chinese coins starting to lose their international significance. To some extent, the Spanish dollar, the silver dollar, is taking over. And for a while, it was the Dutch guilder that was really the currency of choice. But then for a long time, you had the British pound and the Bank of England dominating international trade and international finance with the pound sterling. One of the key reasons being that indeed the Bank of England played an anchor role for that currency. And it meant that you always, even if you gave credits in pound sterling to someone, if you needed liquidity, you could bring that credit or that paper credit to the Bank of England and got liquidity. And that liquidity aspect, reliability and liquidity are two important aspects of an international currency. The US, which already became the largest economy in the world in the 1870s, took a while to get there. And only by 1913 did they set up the Federal Reserve Board, their central bank. They had abolished the central bank in the 1830s, the first bank of the United States. They had abolished it, and it was not a good idea. And it was a century of crisis and volatility. But in 1913, after the big 1907 crisis, the Federal Reserve was set up, and that was one building block of the dollar dominance. The other was then that the Fed, New York, started to accept trade credits in dollars as a discountable material. That was in 1917. And of course, at the end of the First World War, more so at the end of the Second World War, the old hegemon, Britain, was exhausted, was deep in debt, and really didn't play much of a role. After the Second World War, of course, the dollar became the system. It was the only currency that was convertible into gold, which was the anchor of the Bretton Woods system. But even after the demise of the Bretton Woods system, everybody still wanted dollars. And that is in part because of the reliability of the dollar, but more so also because of the what economists call the network effects. Because everybody uses dollars, you might as well use dollars in international trade and international finance. So the dollar is still quite dominant. The renminbi became a currency before the People's Republic was founded. So it is older than the People's Republic. It was created in December 1948. Then the Republic of China currency no longer functioned, and the communists decided they needed their own currency in the communist occupied territories, and that became the renminbi. But it really became only a currency, I would say, by 1994, when it's unified the various exchange rates for convertibility on the current account, not yet a capital account. Before that, the currency was much more of a unit of account rather than a currency the way we would understand a modern currency to be. Basically, it was an exchange for internal and external resources that trading companies, which were heavily regulated at the time, could use to convert domestic resources into export prices. And then they had to give the foreign exchange gained back to the central bank via the Bank of China. So there wasn't much of a currency system. That changed in 1994, but as you see on the chart, for a very long time, it wasn't much excitement in the renminbi, a tight relationship to the dollar until basically 2006. It was good and bad. It was good during the Asia financial crisis because everybody valued the stability of the renminbi, but after China joined the WTO, that tight link to the dollar at a fairly depreciated rate became an issue because of the large accumulation of current account surpluses and domestically a large accumulation of international reserves. We then see the initial floating started in 2006, but by the time of the global financial crisis, China decided to again basically try and keep the RMB as stable as possible vis-a-vis the dollar to provide stability to the world. And I think at that point in time, it was extremely welcome. But it was on an appreciated trend until quite a bit. And then in part as a consequence of a drive of the internationalization of the renminbi, and I'll come back to that, by the mid-2015s, you see more volatility in the dollar. There is a somewhat botched exchange of system. The currency system was changed, but it wasn't very clear how the currency system was changed. So there was quite a bit of panic, a lot of capital outflows. China lost about $1 trillion of its $4 trillion in reserves during that time. And then basically we have a return to a system that is a loose peg to the dollar. It's officially a basket of currency, but the dollar plays a very big part in that. And that's where we are now as a currency system. During the turn of the Fed policy, we see a depreciation of the renminbi, but that everybody depreciated against the dollar at that time, which is different now. So that's a short history of the renminbi. As I said, the debate now is is the international system going to change? I am relatively hesitant of it, but it is a very strong debate going on internationally at this particular point in time. But the rumors of the dollar's death, in my view, are still very exaggerated, greatly exaggerated, to paraphrase another American author. And if you look at the position of the dollar by mid-2024 in international reserves, in international debt and loans, global payment, and currency exchange turnover, the dollar is still very, very dominant. And the renminbi is hardly present. Frankly, 2% of international reserves, 0.8% of international debt, and 2.4% of international loans, despite the fact that China is a big creditor to the world. A bit larger in international payment, not least because of China's dominance in trade. But the exchange turnover is still very, very modest, in part because you cannot exchange that much RMB against as many currencies as the dollar. You can exchange the dollar. I think you can get a quote of over 100 currencies. If you go to a New York bank, in China, it's about 28 currencies. So by necessity, the dollar is much more a counterparty in currency exchange, in currency trading, than the renminbi is. Now, this is a little bit distorted because on the payment currency and the currency exchange turnover, it's SWIFT data. SWIFT is the Belgian-based organization, but that is basically a messaging system that facilitates exchange of international currencies and payments. And China has its own. So there is still some payments outside, and I'll show you some numbers in over time. But the SWIFT numbers, they even have an RMB tracker, but they underestimate the presence of the renminbi in international payments. So again, this is the international reserve, and China's the renminbi is very, very modest part in that, and it hasn't really changed that much. The dollar has been becoming a bit weaker, but not so much at the gain of other currencies in international reserves. But it has become, if you want, a retro move back to gold, and central banks have become more interested in gold in recent years, and that has been the dominant. It's not the euro, it's definitely not the renminbi, but there is more interest for gold from central banks, including from the People's Bank, where you see that China's gold reserves are also on the up. Again, the international role of the renminbi is still very modest. But if we look at China's own cross-border transactions, it already looks a little different. And mind you, part of the reason why the SWIFT data looks somewhat different from these data is that this is in part done through their own international payments and settlement system, the CIPS. And that gives a more, if you want, a more positive view on the use of the renminbi for China internationally. So all cross-border transactions, it's now about 50%, and in goods trade, it comes at around 30% use of the renminbi in those transactions, so quite a bit higher than the SWIFT data would suggest. And in part, that is because China is, of course, a big part of international trade, but it's also becoming a growing part of international investments, and we'll dig deeper into that. So the RMB use, if you look at it, add up the total with the CIPS and the SWIFT, you come to a larger share of renminbi in settlement of China cross-border. So China itself uses the renminbi internationally much more than before, and it really started in 2010. I'll come to the policy decisions later on, so then I'll get the policy story. again, the dollar is still quite present in China's own cross-border payments, but you see the renminbi gaining significance. This is the same information as the last slide, but here we add the other currencies. Hardly any euro, hardly any in yen. It is basically renminbi and dollars that play the main role. There is a growing appetite for renminbi assets, and since the establishment of the channels for that, again, I'll provide more detail, foreign investors are starting to pick up more assets in renminbi, bonds, stocks, loans, and deposits, either in Hong Kong or on the mainland, and it's becoming increasingly easier. Of course, these are international investors. Some of them are central banks, but they're also guided by simply how can we make money out of this? And for a while, the interest differential between China and the US was very much in favor of China, or depending what you look at, but you could get higher interest rates in China. So there was quite a bit of interest in China's domestic assets. Since the turn of the monetary policy in the US and in Europe, it has become easier to make money there, and the interest differential has reversed itself. It's now you get lower interest in China than in the US, and it's about comparable with euro. So the enthusiasm for RMB assets has leveled off a little bit, I would say, since then. Surprisingly, as I said, because China is such a large borrower in international debt outstanding, the renminbi barely shows up. It's largely dollars and euro. Euro has a pretty strong position because they are a big international creditor, but a lot of the international debt transactions are still done in dollars. We asked a number of Chinese banks, and they say, well, why don't you do more business in renminbi? And the answer we usually get, well, our clients want dollars rather than renminbi, which is fair, but it's also a point of attention maybe of policymakers if they want to become more ambitious in internationalizing the renminbi. All right, so a growing but still very modest share in the international use. And if you're really strict, you say, well, this cross-border use with China is actually not international use. International use of the renminbi is if Kazakhstan makes a deal with India and does it in renminbi, and then puts it through the payment system that is based in China, but it really should be third parties that use renminbi. In that sense, there's no data on that, at least not data that we know, but that hardly seems to be taking place at all. Maybe now with the situation on Russia, they are using a lot more renminbi. They're trying to use a lot more renminbi that they receive for their commodities supplied to China, to use it to buy other things from other countries. But from what I understand, they haven't been that successful either. So now let's look at the plumbing. And you can think about renminbi internationalization as having two parts. You need to have policies that are conducive to that, but you also need to have literally the infrastructure to do that. And of course, the US, it's the infrastructure that creates, if you want, the networks effect that are so strong in the dollar. And the US has the chips, the international payment system, the dollar payment system, and of course SWIFT, which is not US but strongly dollar dominated, as being a very strong infrastructure for the international use of the dollar. And of course, there's no capital controls in the United States, so it's very easy to temporarily put your dollars that you get in a transaction, to put them to work in the US capital markets. So how's that with China? Well, China has actually, and maybe a little bit under the radar screen, but they have built a lot of channels, even though formally the capital account is still managed. But for foreign investors, getting into China, making your investment, and then importantly, getting out of China again has increasingly become much easier. For Chinese citizens, it remains very difficult to take your money out. You still have the $50,000 limit for every year, which has been really tightened up after the volatility in the stock market, in the currency in 2015, 2016. So there is, if you want, a one-way capital account opening. And the qualified foreign investor and the RMB qualified foreign investor, the QFII and the RQFII, they were the first channels to bring those investments in and bring those investments out. But since then, since 2010 and 2014, the Stock Connect, the Bond Connect in 2017, and now we have a Swap Connect. There's many more channels by which you can invest. And as a matter of fact, the qualified foreign investors scheme is no longer that important compared to the Stock Connect and the Bond Connect, which have overtaken, which is an easier, less transaction heavy channel, and most of the investments into China now come through the Stock Connect and the Bond Connect. And within the QFII, what you see is that since 2021, the quotas which were in place have actually now been abolished. The domestic quotas are still there. The most recent announcement, and it's only 2 weeks ago, is that the domestic quota would go from 180 billion to 250 billion. Frankly, China could sustain a lot more, and it would probably be useful also in the internationalization of the renminbi, but they maintain nerves about large outflows of capital if and when they were to liberalize the capital account in that sense. But the foreigners, they have no more quota on the inflow. So if you are a qualified investor, be it a central bank or a pension fund or a bank, if you're qualified by SAFE and the capital market regulator, you can invest in China and take your money out again. The plumbing in terms of payment system, the CHIPS, the China International Payment System, is plugging along. China decided in the early 2010s to make that payment system as a complement, if you want, to the existing international system. There is the CHIPS, but also the Euroclear, the other international payment and clearing systems are there. But China wanted to have its own as part of the policy to have a stronger presence of the renminbi. Well, they're doing quite all right. There's now about $25 trillion a year being cleared every year through CHIPS, which is sounds like an awfully big number, but if you then read that CHIPS, the US equivalent, clears about 1.8 trillion every day, you see that the CHIPS transaction number is still relatively modest compared to the established system. So a young upstart system, if you want, but with potential. And there is the membership of CHIPS is quite international. There are a number of foreign banks, including HSBC, Standard Chartered, are member of CHIPS, and so that is an institution that can gradually build. There is about 1,500 total members, direct and indirect, so associated with CHIPS, but it's still not the dominant payment system, not even for most Chinese banks, and that is in part, again, the network effect. If you need to deal with another bank that is not a member, you might as well use the dollar-based system rather than convincing that bank to become a member of CHIPS. There's also some transaction cost involved if you want to become connected to CIPS, you need to have dedicated messaging lines, and that's costly. So if you don't do that much transactions in RMB, it's maybe not worth it, and you basically work with a correspondent bank that is linked to CIPS, but also linked to the dollar-based international system. So that's how it works for now. But that's an area where you could say that can fairly rapidly change if and when the conditions are right, when the cost maybe change. This could expand quite rapidly. It could also expand quite rapidly under pressure. And Alfred already mentioned the sanctions. We will talk about more in the discussion. But one reason to have your own payment system is, of course, that you cannot be excluded from it. So if you were to give one line of defense for the renminbi, the CIPS is really the defense mechanism that would allow, no matter what the sanctions would be, it would allow transactions in renminbi to continue. Physically, the infrastructure would be there. It will still be very complex. We can debate that later. It would still be very complex because normally you're not a member of just one club, the CIPS club. You're a member of many clubs, and you would still need that international connection to maybe SWIFT-based banks, and that would still get you into trouble if and when sanctions were to happen. Now, the Europeans, they try to counter that. And if some of you may recall that the US put heavy sanctions on Iran through the payment system in 2015 or 2016, when the talks derailed, when the US stepped away from the agreement on Iran nuclear development. And the Europeans tried to push back and basically made an anti-sanctions law that would allow banks to continue to transact with Iran. Frankly, it didn't work. And why didn't it work? Because the US would still say, well, even if it's legal for you in Europe, that whatever you do in the US and in dollars, it's still illegal, and therefore we will come after you. So that is a fairly powerful tool that the United States has. And the question is whether China's alternative mechanism would be sufficient protection for that. The number of clearing centers where you can bring your RMB, even if you're not linked to the RMB network, to the CHIPS network, is rising clearly, especially since 2010, 2011. And the geographical distribution, interesting enough, the United States is part of it, Latin America is part of it, a lot of Asia, still fairly little in Africa. And so if you want, it's not a Belt and Road clearing networks, but that could be one area for growing the network of clearing centers, where that would then become easier for many trading parties in those countries to say, sure, I will accept renminbi and I'll just bring it to the clearing bank, and I can immediately turn it into currencies of my liking. Without a clearing bank, it becomes more convoluted and more risky. That's why the dollar still has such a dominance. And interestingly, the central bank has, if you want, backstopped a bit of renminbi trading by growing people's bank swap lines with those countries. And the swap line basically guarantees liquidity in renminbi. And that would then allow, of course, countries to say, okay, well, if I can get liquidity in renminbi, I can also hold securities in renminbi, or I can also encourage more trading transactions in renminbi, because I can always bring the RMB back and use the swap lines to get my own currency back. That is a sort of a guarantee for the use of renminbi. As Alfred knows, the swap lines have been a bit of a policy instrument, and in the case of Argentina, the swap lines were drawn in to actually finance the program, and I think it's also in Pakistan was the case. But more broadly, the tool for using swap lines, not unheard of. The Federal Reserve also gave swap lines in times of crisis to European central banks and Asian central banks. is almost, it's not an insurance, but it makes using the renminbi for your own payments or for your own investments, as either as a central bank or as an actor in countries with a swap line, makes it easier. And they're clearly on the rise. Now, here, and I'm happy to pick this up in the discussion, and Alfred already mentioned Enbridge. And now, again, China has been very innovative, in part because of its backwardness. They've been very innovative in fintech and in e-money, if you want. And Alibaba and Weixin, I always tend to see them as the first stable coins on Earth. So China already has a stable coin. I don't see this need for new stable coins. And there's, of course, the development of the digital renminbi. Now, that is one of these. It's a known unknown. China has been developing this digital currency. It's been testing it quite widely by now. And the difference between, if you want, a stable coin and a digital renminbi is that a digital renminbi is really central bank money. It's just as if you have a piece of paper that says 1 renminbi in your hand. And the advantage of that is that you have certainty of clearance. A stable coin, frankly, is a claim on whoever issues the stable coins. And it could be good, it could be bad, they could be prospering, or they could go belly up. They're supposed to be one-on-one against a currency backing, but you never know what is going to happen. As a matter of fact, in the digital sphere, there have been accidents. So I think the digital RMB is a real competitive advantage. China is well ahead, and the United States says, "Oh, we're not going to do a central bank digital currency because of security reasons, because of privacy reasons, and maybe also because the president of the United States really likes cryptocurrency." As a matter of fact, he opened his own cryptocurrency fund, and that may set back the dollar in a bit, because what if, and that's the next line, what if the digital renminbi can talk with other digital central bank currency? And the Enbridge, in my understanding, is really the type of mechanism that would make that possible. So it's countries that are linking up, and they're linking up their digital central bank currency and make the exchange and settlement of outstanding balances much easier and basically instantaneous. That I find is a very promising, as of yet unknown, but a very promising route in which you could say, well, suddenly it becomes a lot easier to internationalize the renminbi, not in defense of threats or sanctions, but simply because it's a lot more convenient to use. So I think that is really a space to watch. And I mentioned my skepticism on crypto and stable coins, but don't believe me. Just read the latest report of the Bank for International Settlement, who devotes a chapter to that. BRICS Pay is a little different. Enbridge, if you want, is a combination of countries that are by and large led by China. The BIS was involved, and no longer, but they were involved in setting up Enbridge. BRICS Pay is supposed to be a payment system among the BRICS countries. There, even though there's a lot of talk about it, it's probably harder to govern. It's harder to manage a lot of big countries that each have their own ideas and each have their own initiatives, to put them together and bring something unified. I see Enbridge as more promising than BRICS Pay, but again, time will tell. And crypto and stablecoins, let me not say more about that. So that's, if you want, these are the known unknowns. They could emerge. They could move very rapidly. The developments in crypto has been very rapid. Digital renminbi, in my view, is a great bet for the internationalization of the renminbi. Okay, I'm running behind. I know that. So now let's talk a little bit about what I believe is the true bottleneck of internationalization of the renminbi, and that is in the end the domestic policy decisions that are needed for making the moves to make internationalization of the renminbi faster. The domestic policy debate took off really in 2009, and this is the popular debate, but this is the academic debate that you see on the right side. And of course, it's no surprise. It was Governor Zhou Xiaochuan, after the global financial crisis, that made a proposal at the London G20 summit to basically change the foundations of the international monetary system. He didn't say abolish the dollar, but to change the foundations. And he really saw a great role for a new international currency, a little bit like the Bancor or maybe the SDR in a different incarnation. And basically that proposal didn't go anywhere. But then the governor and the People's Bank said, okay, well, a problem. And the dollar problem is, in short, always when there's problems, there's a shortage of liquidity in dollars. That's one. And the second is always when the United States changes its monetary policy, it puts waves through the whole international financial system. And that's in part because the dollar is so dominant. If the United States tightens, interest rates go up, Mexico defaults. If the United States loosens, everybody borrows to the hilt and then prepares for the next crisis. So moving away from that would require, if you want, a multi-currency type of solution. You see a very big attention since 2009, and the peak is really 2015. Lots of movement in loosening up of international capital flow, lots of movement domestically of liberalizing lending rates, of more flexible deposit rates, of allowing more non-bank financial institutions to emerge, and the peak is 2015. 2016, a great victory of the renminbi entering into the special drawing rights, into the basket of currency behind the IMF's SDR, and then things quiet down. And I mentioned before, when I showed the chart on the renminbi, it quieted down because there was so much volatility in the markets, not because of the internationalization of the renminbi, but a little bit in association with the policies that came along with that internationalization, that people put a halt to it. And really only fairly recently, and Alfred already mentioned it, especially since the debate on sanctions, the Russia's invasion of Ukraine, and the sanctions that followed that, the debate is back in a different way. Zhou Xiaochuan really talked about making an additional contribution to the international monetary system, avoiding the downsides of a single currency-based system. The debate shifted more towards how can we defend us, China, against potential sanctions. Now, interestingly enough, the governor, Pang Gongcheng, had a speech just a few weeks ago in the Lu Jiazui forum, an important forum in Shanghai, and he came back almost to those same principles of Zhou Xiaochuan. So yes, he mentioned the sanctions one, and he mentioned the abuse of certain countries of their position in the international monetary system. But they also came back to this idea that simply a single currency-based international system is not very good for the international community, so that a multi-currency-based system would be desirable. That was really the point of his speech, and I believe that will also drive the next level of debate. Just briefly, and I know I'm running out of time, I'm very sorry, I timed my speech badly, but so 2009, you see the PBC governor in London. The 5-year plan, a 12-5-year plan, does not yet include internationalization of the renminbi, but a push forward with renminbi convertibility on the capital account. CHIPS, established in 2015, and such operations in 2016. the 2016 entry of the SDR, and the internationalization of the RMB as a term is included in the 13th five-year plan, which was sort of ironic because it was months before they started to backtrack on the policy after the entrance of the renminbi in the SDR basket. The term of internationalization of the renminbi is coming back in the 14th five-year plan. But then what I think is the most significant, and that's why I think this wave is different. This wave of internationalization of the renminbi is different from the 2009 wave, and that's because the Party Congress, the 20th Party Congress, talks about prudently and steadily promoting the internationalization of the renminbi. So, I mean, to put it briefly, it's Xi Jinping himself that is now on board. Second, the Central Financial Work Conference, the once every 5-year conference that happened in November 2023, includes this goal of China to become a financial superpower, not just a manufacturing superpower, but a financial superpower as part of high quality development, which is the highest level goal for Xi Jinping in thinking about the economy, and the renminbi internationalization is part of that. My friends in Shanghai were delighted to hear that, and since then, there's more signs that simply the February 24 Central Committee conference on the financial system shows the direction that we would see that internationalization of the renminbi as part and parcel of building a financial superpower and as part of high quality development. And as I said, the People's Bank Governor, Pang Gongxiang, has the same observations, but then looks more at sort of going back to Zhou Xiaochuan's philosophy of a contribution of liquidity, of another means of payment, another means of borrowing, if and when the dollar is basically managed just for the US purposes. I will skip this. We've gone through that for quite a bit, and I'll take 5 more minutes to talk about the future. So, as I concluded there before, yes, there's been a lot of attention to internationalization of the RMB, peak in 2016, still a fairly modest role, but now there's a renewed attention. Some say, well, we need to really think defensively to defend ourselves against the possible sanctions that might come if there were to be an international incident. Others say, well, no, we really need to take this opportunity of the US basically shooting itself in the foot, making the dollar less attractive as an international currency, making the rule of law back home less certain as it was before, making policy much more volatile than it was before. These are great circumstances to much more rapidly move towards the internationalization of the renminbi. Others say, well, you know, the steady she goes, very gradual, step by step, what we have been doing over the past 15 years is good enough. So looking at those external drivers of change and the internal drivers of change, you can, if you have 2 by 2, you can think about 4 scenarios. And these were the scenarios that we came up with. So I still think we're still sort of in the slow ascent, but I hear signs that we might go to a rapid rise of the renminbi fairly soon, or withdraw in sort of a safety net position, putting up the defenses, strengthening the tips, strengthening the stability of China's payment system, expanding the renminbi trade to commodity countries so that commodity supplies are certain. That would be a sort of a safety net type of approach from a conservative perspective. And then if you are a reformist, but the external environment is very adversarial, I don't think it's a good time to be very reformist in a time when there is a big international incident. So I think three scenarios are sort of reasonable and plausible. For time reasons, I have to refer you to the report because then we can take more time for the discussion. So what would that look like if and some is slow, some is less slow. But what would the type of steps that would internationalize the renminbi? Well, I'm not going to go through all of them. You can read them, but increase the domestic quota, having Chinese bring more RMB abroad. Do more lending in renminbi that brings more renminbi in circulation internationally, whether it comes back to China or not. Encourage banks to do more lending abroad in renminbi. And so basically offer better terms if you do RMB lending rather than dollar lending. And interestingly enough, China has a $2.5 trillion debt in US dollars. So China can actually reduce the buildup of dollars that they get from their current account surplus by basically paying off these US dollar debts that were incurred by banks who want to do international lending. It doesn't make much sense for China, so it would be very reasonable steps to move forward. Well, expanding the number of CHIPS members, increasing the number of RMB clearing centers, basically building further the infrastructure would all lead in the end to a more presence of the renminbi. Let me stop here and take the difficult questions in the discussion. Thank you very much.
Thank you very much, Bert. I think that was a fantastic presentation, kind of setting the stage, putting things in a historical context. And I think you've covered pretty much all of the key areas that one ought to look at. Before we open up the floor for questions, maybe two things I wondered you kind of did not touch upon too much. One is this broader issue of, if you ultimately want to become more of a reserve currency globally with a country that runs current account surpluses, that is somewhat difficult. Or the flip side of that is the US is in a very good position. It would be in an even better position because by all predictions, their current account deficit could even increase further. Maybe that's one. The other one I think that you hear from investors, and I think even people in China among policymakers, is the certainty, the legal frameworks surrounding government intervention. And you can look at it from a positive and from a maybe a negative side. You could argue, or some people argue, where China is actually relatively good. It can stabilize its economy by mobilizing, all different levers of the government. And stabilize markets, for example. But the flip side of that is that the government steps in. And that is maybe not so good as some would say for the rule of law or the predictability for investors. So these two big kind of elephants in the room, you didn't really mention too much, but maybe you could just give a 2-second answer on that.
Yeah, so the first is actually not an elephant as far as I can see. So it's perfectly imaginable that you have a reserve currency status if you run surplus on your current account. As long as you have lots of inflows on your capital account and outflows on your capital account, you can create sufficient assets in your own currency to make it attractive to invest in that. The question is whether you want to do that. I think that is it's the policy question, because I think the US to some extent is right. Steve Moran is right that if you have a reserve currency, you get a lot of capital flows for no reason or for reasons of certainty and stability, and that appreciates your currency, and that might just disadvantage you in your economic goals. And that's one reason why maybe what we see happening with the dollar right now. So I don't think China has international use of the renminbi. Yes, international reserve currency is a different thing. But I think the sort of the classic. I mean, after I think it comes from the early 80s when there were a couple of classic articles on the characteristics of a reserve currency. One of them was, well, you have to run deficits. I actually don't believe that is true. The US dollar was a reserve currency under Bretton Woods, even though they ran a surplus. Yes, it was different, but that's not the bottleneck. I think that there is a choice to be made. And as at the inflow on your current account in international currency, you can turn it around saying, well, let them use renminbi and you have some market power as China. But second, you can use the inflow on your current account to pay off some of the international debt that China still has. I said it's $2.5 trillion in debt that largely banks have accumulated to do international business. Now, so there's some way to play. Now, on the second, so yes, but it's all relative. So China, there will never be a rule of law the way the West understands it. And mind you, there's different interpretations of the rule of law, and there's lots of creative use of the rule of law in recent years and months. Okay, the European constitutional notion of rule of law is very different from the common law kind of rule of law that we know in the United States and England. And what we have seen in the United States is that even with what many people thought was an ironclad constitution of checks and balances, they actually evaporate if there is political change. So politics is stronger even than constitutions, which is remarkable. Now, I mean, I'm not preaching on right or wrong, but I would say this is all relative. So yes, China needs to pay attention to a number of things. They can help themselves if they have the objective to a bigger use of, if they want more capital inflows. Having transparency, having stability, predictability of policies is incredibly important for this international use of the renminbi. I believe, and as I said, politics changes. So politics in China has changed, but take the whole reform and opening up. 1978, all we had was a promise of Deng Xiaoping. There was no legal system. There was no rule of law. There was a promise of Deng Xiaoping that says, yes, we're going to open up. We need the help of foreigners. We're probably going to take about 100 years. Do come, and we'll be good to you. Now, that hasn't been as consistent, but that was enough for thousands of international firms to basically make bets on China. I think, I have never heard that a central bank ran into problems with their QFII investment. Yes, there is repatriation of individuals. That's why the bad stories come in, like foreigners that live in China for a while, they buy an apartment, make huge capital gains, and then getting out that money is difficult, or they bring in dollars, an individual. That's hard. But for the qualified foreign investors, I haven't heard much of any problems, but I would be very open to hear, because it would be interesting. And I think China can address some of it. So I think the legal system is very relative to others.
And maybe there the international environment in other countries is helping, because in relative term,
correct,
China might not be the only one intervening in markets. But let me open up the floor to discussion. Just a few rules. First of all, this is on the record, so whatever you say or put in the chat, assume it is in the public domain. And secondly, if you speak up, raise your hand, or feel free to put your question in the chat, and just identify, keep your question short. Maybe I'll start out with Changgang. Changgang, please feel free to articulate your question.
Yeah, hi, Bert.
We cannot hear you very well. You need to get closer to the microphone.
Hello, can you hear me? Yeah,
yes.
Hi, Bert and Alfred. So my question is about the opening up of China's capital account. You mentioned some of the factors that might affect the process, like the stock market crash 10 years ago. But my question is still about why China has been so slow in opening up the capital account. Is the stock crash really the reason behind it, or there are other factors that have slowed down the process? Thank you.
Chang'an, just because ideally introduce yourself. So you're
Yeah,
with
my name is
EAI.
Chen Gang,
Yeah,
Senior Fellow and Deputy Director of the Institute. Yeah.
very good.
All right, thanks. Yeah, so I mean, it's all politics, I would say, but there is a certain fear from China on the consequences of further opening up the capital account. I said on the inflow, they're much nicer to foreigners than to their own domestic audience. And part of the reason is the nightmare scenario for policymakers in China is what if all this money, the 200% of GDP and M2 starts running for the door? That would be really bad. It won't happen, and it never happens in those cases. But China has been very, very careful. On the inflow side, China has also been careful to a certain extent because of the conditions of the financial system and the conditions of the enterprise system. The IMF, that Alfred's previous employer, always says that you first got to get your financial sector in order before you can open the capital account. I don't really believe that, but there is risks. There is risk involved. Now, on the other side, which makes opening of the capital account more attractive, as I said, the opening up the capital account would greatly facilitate more international use of the renminbi. Okay, because then it becomes much easier to temporarily park your money in RMB based investments, and if that becomes, that's a good vehicle to internationalize renminbi also in transactions. For China, given their position in the world and their changing position in the world, it actually makes less and less sense to do things in dollars, because dollars are no longer, there's only 14% of their trade that goes into the United States now, and it's probably going to be less. It's probably going to be less when we're done with all the tariffs. Whereas it's now 40-some% that goes to Belt and Road countries. Where the renminbi could be a very good vehicle for a transaction, a common vehicle for transaction, just like the dollar was for most of the Western economies thus far. So I believe that a further gradual opening of that capital account is possible. I also believe that for qualified investors, it's pretty much what you can do already. There's not more international inflows at the moment because it doesn't pay off. The interest rates in renminbi are not as big. But I do think, look, the bottom line is there was a shock to the system in 2015, 2016. I think politically it took a long time to overcome that, and sort of understanding that you can still further progress along the lines of opening up the capital account without repeating what happened in 2015, 2016.
Thank you. We have Yili. Can you maybe unmute yourself and introduce yourself?
Hi, Bert. This is Chen Yi, and I teach I teach economics at SUSS. So my question is quite brief. Basically, with a slowdown in Chinese economy and also the changing demographics and aging population and an expected falling population in future, I was wondering if these broader trends might affect the internationalization of the renminbi.
It's an interesting question. I don't think I see much of a direct link. One of the fundamental reasons, and that links back to Chengang's question. I mean, the rates of return on investments in China are very low, which means that with China's demographics and China's growth prospect, you actually don't have enough returns or money on your investment to pay future pensioners. It's as simple as that. It would be great, therefore, that there would be more outflow of money to destinations that have higher returns. It would be great if you can do that in renminbi, because then you only have interest rate risk and borrower risk, not currency risk. So that could be one link that I see. That would be one consideration for China to further opening up, also for the outflows on the capital account. Okay, in search for yields. China needs higher yields on their investment for future pensions.
Magnus Broad. I think you might have to unmute yourself, and if you can, feel free to show yourself. If not, I can also read the question. So we have a plan A and a plan B. Maybe I'll just go ahead. The question, I think, so for everybody, are there any advantages for developing countries of RMB denominated loans compared to US dollar denominated ones?
So at the moment, it's very clear. It's cheap to borrow in renminbi. Okay. Now, of course, you would say, well, but the renminbi may appreciate, and then it doesn't become cheap anymore. But at the moment, it's much cheaper to borrow in renminbi than it is in dollars. Second, and that depends on sort of what you borrow for, what type of loans. But on official financing or development financing that China does a lot, there is a very different way that China approaches issues that might emerge down the line than if you want a more international system. So it might be useful from a management point, a creditor-debtor relationship point of view, to borrow renminbi compared to the rest. I mean, the Western credits have really moved very strongly towards bond market. So if you get everything non-official goes through the bond market, and the bond market is a tough master because you can't call the bond market. So you either pay or you default. Whereas China still has a tradition of doing lots of bank loans, and that's a tradition that used to be in Europe, used to be in Japan. And there you can, if you want, you have more flexibility if and when there is any payment issue. So that's a second reason for maybe considering renminbi denominated loans. It's more for China-based loans, but that could be RMB denominated loans. The third is, if you, aside from the interest rate differential, if you get a lot of revenues in RMB on your trade, you might as well borrow in RMB. Take Saudi Arabia. If I was Saudi Arabia, you get tons of renminbi, or you could accept tons of renminbi for your oil. So you might as well take lots of RMB credits to build your very ambitious plan for development, and then pay back in the renminbis that you get for the oil. So this trade and investment is really going together quite strongly.
Alessia Qua.
Thank you so much, Professor Hofman, Alicia from Temasek. You just take, the premise of the internationalization piece, and assuming we leave aside the reserve status, we also have to sort of take into account the issue of trade imbalances and all of this, right? I think you started to allude to this. So if China runs a persistent trade surplus and everybody else or deficit where it exports more, then does that in practice cap the amount that a third country might be willing to take RMB trade invoicing, capped by the limit of their purchases, right? Because the imbalances feature into the extent of the liberalization. We don't have that issue with the US. Obviously, it is the opposite problem. Thank you.
Right. So I mean, that's why I think that sort of further opening up further application of renminbi in trade also in the end requires further opening up of the capital account and more capital account use of the renminbi. So because you would be able to accept more RMB in payments if in the end you can also get rid of them, And if your central bank is backed by an RMB swap with the People's Bank, so then the use of RMB becomes much more natural. You don't have to be nervous for getting rid of it. So I don't think that sort of a current account surplus or deficit is essential in any way, but the whole package of an integrated policy response of sort of gradually moving on the trade side should go along also with on the capital flow side, even if it's just trade finance, but then backed up by swap arrangements, backed up by longer term investment opportunities. So it's a package, if you want, that would make that model work. I don't know whether this answers your question, but
yes, thank you.
Please feel free to put your questions in the chat or raise your hand. Maybe I could just jump in and kind of ask one question. You alluded a little bit to these emerging frameworks / technology. You mentioned, for example, Enbridge. And you also mentioned at the very beginning that, of course, having one currency being the unit of account, store of value, and also to price products has, of course, a big advantage because it's the network effect that you're talking about. And of course, the internationalization of currencies, of them, one being the RMB, is potentially movement in a different direction. It raises the cost, transaction costs are becoming higher. And if you look at something like Enbridge, for example, which currently has 5 members, the PBC, the Hong Kong Monetary Authority, Saudi Arabia, UAE, and Thailand, if I'm not mistaken. It could very well become a, let's say, from the governance side, structure that is maybe led by China. Europe is developing its own parallel system. You mentioned the US moving ahead with crypto stablecoin. So how do we balance this thing, or should we look at all of this from the point of view of the cost and benefit of, on the one hand, having a monopoly, which can be extremely efficient, and on the other one, having a completely fragmented system with humongous costs? And how do we think about this? And what would be your prediction if you had to look forward in terms of where we're heading toward? And of course, as part of that, the RMB being a very important part.
All right. So look, as you say, a few currencies. I'm not sure whether one currency, because then we would need to have the SDR step up if one currency is ideal. I think a few currencies would be good, right? Because there's also considerations of in the end, the underlying monetary policies in those currencies that we know affects the conditions in those countries that use the currency for international transactions. Okay, and that's the dollar problem, if you want, right? That's what Joe Shachuan started off with, but it has a long history. So that dollar problem. So somewhere in between lies the optimal. The complication of the sanctions is an interesting one, because you could have say, well, I'm going to walk away from the dollar because I don't want these sanctions, and then tie your future to an RMB-based system. But then the question is, okay, will you be friends with China for the rest of the future? Because China also has, it has taken coercive measures in trade and otherwise. Will they use that power that they would assemble in? So the multiple approach, in a way, is a logical outcome in a situation where the world is less certain than, say, 20 years ago. So, and then you would say, well, the renminbi should definitely play one role, but the euro as well, and the dollar as well, and maybe a few currencies as well. So the very basic fact underlying, and that's why this cryptosphere is interesting, or whatever it's going to be, or the electronic central bank currencies is interesting because it would majorly reduce the transaction cost. The infrastructure cost money, and as a matter of fact, when we talk to a number of banks, sort of, why ain't you a member of CHIPS? They say, well, it's too expensive. We have SWIFT and we have CHIPS, so CHIPS is just an addition, and we're not going to really use it much, and that's too expensive. So there's a cost element to that is very trivial, but not unimportant. So, but I think we're going to end up with a more multi-currency system. Alfred, you would agree with me that you said, well, if it is a more multi-currency system, you might as well take one currency with a basket of multiple currencies. That would be the ideal solution. Frankly, I don't think it's going to happen. I don't think it's going to happen because right now, the international organizations that would need to bring that about, they are divided among their membership, their shareholders as well. So it's not going to happen. It's going to be more of a competitive phase amongst a limited set of players. You're mute.
It is, as you said, it's all about the governance structure. If you were to adopt something like the SDR, that of course would mean that the country that currently dominates the international financial system, the US, would kind of have to go ahead, and that is probably not very likely in the foreseeable future. But I think that's the challenge with all of these initiatives. At the end of the day, you need governance structures. You know, Enbridge has a governance structure, and there might be certain countries that are willing, and there might be others that are not willing to join. The Europeans might have their own structure, and there are countries that might join, and others that might not. But that's a nice signet. Tim, you had a question about the Europeans, so maybe you can articulate and introduce yourself.
Yes. Hi, Professor Bert. Hi, Alfred. This is Tim, founder and CEO of Edge Research. So we serve institutional investors and corporates here in Singapore. So my question here really is about the European government's perspective on the internationalization of RMB. Simply put, do they see this more as a risk, something neutral, or something different?
Yeah, thanks. Look, I think, well, you've heard, or you may have heard, the speech of Christine Lagarde in all of this, where basically she made a pitch for the euro as being at least one of those currencies, but an alternative to the dollar, which now seems less shaky. So a bigger role of the euro into the international system. The euro has advantages. I think on the governance side, they have advantages compared to China because they are more open, they are more transparent than China is. The capital flows are more open, but they also have disadvantages. I mean, the fragmentation of the capital markets in Europe is, I think, the major bottleneck for the euro to play a bigger role. Yes, maybe the European Commission is going to be very ambitious and issue an awful lot of European level debt in the future, and that would create then a market in which international investors could invest. But I doubt it. I doubt that is going to happen. So then it will by necessity almost be limited. Do they see the renminbi as a well, I think they see it as a competitor, even though the euro has a much stronger position to start out with in this prospective international competition among currencies. But frankly, the question I think that I was asked to address, and the report actually doesn't address it, but it was more like, is it a risk? And frankly, we didn't see much of a risk for Europe. I said the worst possible outcome is a multiple currency system, which may actually be, or I wouldn't say the worst. The most likely outcome would be a multiple currency system, and that doesn't seem to be too much of a risk to the euro. They already live in a multiple currency system, so it would just be shifting emphasis. There's a broader question, and that is not so much the currency composition, but that is more of international transaction. But that's more the the composition of governance in the international monetary system. Now that is a different discussion, but I think there's at least there's some fear that a greater influence of developing countries, including China, would somehow change the nature of these international organizations such as World Bank and IMF. I'm very skeptical there, frankly. I think the developing countries have been, including China, have been very good global citizens at that institutional level, but there seems to be some fear that that might change the nature. So that is seen as a risk. But so that the currency competition itself, I think less. So it would be very hard to imagine that the Renminbi would sort of wipe out the international position of the euro. That they're very good in lending in euros. There's quite a bit of loans, as you saw in one of my charts, quite a bit of debt and loans in euros. There's much less investments in euros compared to dollars because of this fragmentation of the capital market.
I see Vincent Tay. Vincent, do you want to raise your questions yourself, or? Maybe I'll just go ahead then and read the question aloud. Giorgio, in his book Musings, says that building walls run deep in the Chinese psyche. They are not only physical, they are also walls for the capital markets, for cyberspace, for education, and for culture. I don't know if Professor Hofman agrees with Giorgio, but assuming Giorgio is right, would the Chinese diaspora then have any special role to play in helping China modernize and integrate with the world successfully?
Well, I don't know whether the quote is related to the question, but I would very much agree with the observation that the Chinese diaspora has helped China a lot in modernizing, and starting with Hong Kong, with Taiwan, with other overseas Chinese that very quickly established ties after opening up and reform started. I think now, sort of in reverse, I live in Indonesia, as I said. Well, Indonesian Chinese are very much if you want, an initial contact for China's now quite substantial investments into Indonesia, both in mining, growingly in manufacturing, and I guess that is it's sort of this affinity, tradition, similar historical background that creates a confidence that is very helpful especially in developing countries where the rule of law are more down to earth. The legal system may not be as well developed as in other countries. So it's definitely, I think, a plus for China and for the countries themselves that host those minorities. And in Indonesia, it's been hundreds of years. I mean, under the Dutch colonial rule, there were lots of Chinese coming, and then in the 40s, there were lots of Chinese that came to Indonesia. And those ties with China as a culture and then as a nation is still there, and it's helpful.
Yeah, maybe one final question from myself, if there are no additional questions, would be a little bit the role of Hong Kong in all of this. One could argue that, I mean, you went through the plumbing. All the plumbing goes through Hong Kong. And there's new plumbing added almost every day. I think there is a concerted effort now to really use Hong Kong as part of this broader international RMB internationalization. But maybe two questions. First of all, do you sort of like see going forward the role of Hong Kong even becoming more important? But I think maybe the more tricky question is what Hong Kong is trying to do is manage two legal systems, right? It is managing the one that the Western world likes, which is common law-based, that uses Western institutional framework, and then connects to China's legal system, which is continental European-like law. And that creates inherent frictions. So I don't know whether you wanted to maybe briefly talk about the two questions. One is Hong Kong's future as part of this RMB internationalization process. And the other one, this tension between the two legal systems that I think at the end of the day will constrain some foreigners to maybe take advantage of some of the connectivity that exists.
Right. Well, in the second edition of the report, we hope to address the position of Hong Kong. I'm being only partly joking. We haven't really much looked at it, and we got the question, and we put in a box on CNH versus CNY, so the mainland-based renminbi versus the Hong Kong renminbi. I've always thought that Hong Kong would be the Hong Kong capital market, let me put it like this, would be a great vehicle for internationalization. And the analogy would be the euro-dollar market. If some of you would recall from their lectures that, yes, it was the Bretton Woods system, but then what happened after the Bretton Woods system is that a lot of countries were actually, well, some countries were not that comfortable in putting their dollars back into the United States. Others, banks couldn't do sufficient business because of the domestic regulation of dollars in the United States. So they kept their dollars abroad, and that became the euro-dollar market, which was a huge catalyst for ingraining the central position of the dollar in the international system. So all the network effects that we're talking about that are now so hard to unwind from moving away from the dollar, they were really created through the euro-dollar market. Now, Hong Kong, in my view, would have that possibility to be that catalyst to capture, if you want, a lot of the capital investments that would come back if the renminbi is more used in trade. And that could then become, if you want, the euro renminbi kind of market. From what I've observed, there's a couple of things to speak against this. One is and that's IMF playbook. It's not the IMF that stops it, but it's sort of it could cause a multiple currency problem, that the offshore renminbi behaves differently from the onshore renminbi, and that has its downsides as well. The Chinese authorities are very, very cognizant and sensitive to that problem. Second, in the end, you know, Hong Kong is not small, but it's also the mainland is a lot bigger. Shanghai is, if you want, a lot bigger, and Shenzhen is. So I think that Hong Kong alone would not be able to perform that role. Of course, Hong Kong itself is very forward-looking and talking about stable coins. They see stable coins as a great means of contributing to the internationalization of the renminbi, with Hong Kong as a center. I think in Shanghai there's maybe some different opinions on that, but I haven't looked enough in it, and I still need to get my final thinking on why the Chinese, the central authorities, are not using Hong Kong more to internationalize the renminbi.
No, thank you very much. Maybe I ask you this final question also as an advertisement for an event that we're going to have on September 16th at 10:30 for everybody here in Singapore, where the chief executive of the Hong Kong Monetary Authority will enlighten us with how he sees the future of Hong Kong and Hong Kong's financial system. And I'm sure RMB internationalization in that context will come up. But with that promotional piece at the very end, Bert, thank you very much for what I thought was a fantastic presentation, a lot of food for thought. The discussion will continue. This is not over yet, so I'm sure we'll get back to this issue in the future. So with that, thank you everybody for joining us. I think we had great participation, and thanks for your questions.
Thank you, everybody, and thanks, Alfred, for hosting me.
To be continued. Thank you.